Here we're looking at the S&P 500 and we're tracking two wave counts to the upside, and at this stage the two counts are, we can consider this move up through here as wave 1 or the A wave. As an A wave it would be a corrective move to the upside, and that would followed by this wave 2 here or wave B here. And then that's, as we mentioned yesterday, that would be the top in place for the C wave there. And then we'd expect this to work lower down through here. So that's the bearish count. The bullish count is that we are tracking an impulse wave that's incomplete at this stage. So if I can just drill in here a little bit further. So essentially, just a bigger picture here. So we're looking at this being wave 3 to up here, wave 4 back to the wave 4 one lesser degree, and then a fifth wave up. Now, if that's the case, if we get 5 waves here, then after the completed, we'll get an ABC correction, and then we'll get another 5 waves up. So that's what we're looking at there. So we don't know what we've got just yet. Sure, we can take some guesses at things, but in this little section just through here, we could count this in 2 ways as well. So just drilling into that at the moment. The high here, we can look at this as being down for, as an impulse wave, as a bearish market, wave 1, the A, the B and the C for wave 2 here, and then looking at wave 3 coming to the downside through here, which will come down further. In fact, it would take the 1600 out, and if it takes the 1600 out, then well, it's kind of bearish from that point really, so we could use that. So look, we've either got A, B and C here, and if that's the case, we get a move up to 1620, you get support on 1620, then you can trade to 1630 at that point there, because we'd be making new highs from there. Otherwise, we'd be looking for more of a bearish market, so we'd be looking at this down for 1, back for 2 here, and the third wave to come further down through here. So at the moment we can count this down here as 3 waves, looking at the 4th here, the 5th here. So there's still a little bit more to go on. Whatever happens though, we'll either be moving up, but if the market does come down to here, we're going to see a bounce off the 1600 here anyway, or close to it, and we'll see a bounce here. So if we get a bearish move, then it would be essentially coming down to this area through here. Then we would be seeing some type of corrective move coming back up, maybe to wherever this comes up through here, or to the 10 here, and then would be looking at a move further down. So the idea would be to look at shorting the bounce off here and looking to build a trade in through here, and but anything above the 1600 would be at risk. But once the 1600 becomes the retested resistance, then we can move sort of further into the trade at that point. But we would be looking at a failed retest here as the main thing. But of course, as this comes down through here, there's going to be, a series of small tests here before it fails. So that can be an area through there as well. I mean, this would come down and back to here and then move down through there. So there's a couple of entry points there, but the idea would be to build the trade in on that side if that was going to be the case. If not, well, then the long trade would be above the 1620 there. You could probably use the 1615 through here, which would be the midpoint through here. That would be the balance line within that. So you could glean an early trade in from that point there as well. This is the same for the US 30 as well. As we mentioned before, the wave, this is a wave 4 here, and this is only like 20 odd days here, where the wave 2 was something like 43 days or something. So it's still very small for a wave 4 here. That's why we're looking at perhaps a double zigzag pattern through here, which would bring this wave 4 further down through here, and also complete in time much more as well. But we're also mindful that this wave 4 can be the completion there as well. But what we do need to see is we do need to see that 5-wave structure to the upside. And at the moment, we can only see that we've got like 3 waves here. We would need to see that there, and then we would get an A and a B and a C from that point, and then we would be working higher from there, making new highs above this section here. So there's a little way to go before we can. That's why I've been keeping the trades pretty light on the US and the UK markets, because we need to sort this out through here as well. So it's just a timing issue. So yeah, it's just got to play out that way. But obviously, it's exactly the same count as the S&P 500 as well. But we can see that there is a slight bearish connotation to this, because it's spending more time here under the level rather than above it. But we need to be mindful, and we need things to play out as well. Like guessing early can get you into trouble. It's a bit of a greed thing, I guess, but it's good to really know what's going on before entering. And this is clearly a 3-wave structure here, so this can be counted as an A, B and C, or it can be counted as down for 1 and back for 2 and down for 3. And it has moved down quite quickly here, so it does have the personality of a 3rd wave, but we still want to give it time to unfold through here a little bit further. And that's it there, the same situation. So yeah, just really got to let that sort of play out through there. Actually, the Australian market had good volume yesterday, obviously from where are we here? Bear with me here. We've got on the XJO, the cash market, we had a nice strong move up, which is opposite to the US, and we also had nice volume on that as well. It was interesting here that we had this bar down through here, which is on lower volume than the previous day through here. So it was a sign that the sellers were drying up through here and pushing up. So the cash market is at the moment is trading a bit higher at 48.34, where the futures market is trading a bit lower at 47.96. So there is a bit of sort of flatness there that can play out. The interesting thing here, though, is that yes, we're at 4800 here. The move down from this area through here appears to be in 3 waves. There's an ABC correction through here. So the A wave, the B wave down for 1, the A, the B, the C for 2, down for 3, 4 and 5 here. So technically we should make a move above here, and that being the case, this what I think the most interesting part of this at the 4800 here is that this move down through here at this stage is also corrective as well, isn't it? So it would need to get support on the 4800 here, and then you'd build a trade into 10 and 20 and so forth, because it would build above this last high here. So we'd be looking at the 4850 as a target there, but you must be on that 4800 there first. The same as yesterday, we're looking for a support on the 4720 or break above that, and that's sort of panned out nicely. So there's trend, correction, and trend if this is going to be the case. If this doesn't get above the 4800 here today, then I suggest not trading long, and then we'd need to reassess what that situation is and work it out from there. But a break high there is what you're looking for. Let's have a look at commodities. Starting with Western Texas here, the oil market, the wave count that we had here from last session is still on track here, and obviously the 100 here is the resistance, but also too it would fit into the 5-wave structure that we're counting up through here. So yesterday we were looking for we were counting from this wave 4 here. We'd counted the 1, the 2, the 3. We had the 4 in here. This 4 actually can go to this space over here now, because this would be an A and a B and a C wave across here. And it's really good when you get a wave structure that doesn't correct in time. I mean, this one corrected in time here, didn't it? I mean, in price. This one here is correcting in time. So when you see that, you know that it's a really strong market, a market going sideways, just is strong. It's like this one here as well, how it just travels sideways. It's just killing time basically, and reoccurring patterns here as well. So yeah, look, that wave 4 should go to here somewhere. So that would leave up for 1 and back for 2 here. That would be the 3 and the 4 here, and this would be the 5th here. The 5th may even produce another high here. I haven't pulled that apart to count it, but one way or another there's going to be some type of corrective activity across here. But the other interesting thing too is that if this is wave 1 and wave 2 here, and this is wave 3 here, and this is wave 5, you can see that it's expanding at that ratio, the 618 ratio. So this one here, this one. So it's just basically, it's growing. Do you know what I mean? It's not shrinking. So yeah, we'll keep an eye on that. It's probably a good idea to keep an eye on Brent as well, on the bounce here as well. Here, I mean, as long as it stays above this here, then it's positive, but it's also a negative count while it's under this red line through here. So a breaking of that previous low there would create a much more bullish picture as well. But it's still early days, but just keep an eye on that as well. Alrighty, the copper market here, we were looking at this yesterday. We're looking for an ABC correction to the upside, a corrective pattern in 3 waves, the A wave, the B wave to here, and then the C wave to here, which should be in 5 waves. So the 1, the 2, the 3, the 4, pulling back 38.2%, and which I think it comes into 311 thereabouts, and then up for 5 here, which would be the wave C there. So this would be the pattern here on the intraday. So we're looking at the A wave to here, the B wave all the way over to here, and the C wave in 5 waves, moving the 1, the 2, the 3. Wave 2 was simple, so wave 4 will be sideways and complex. The 38.2 retracement level is at 311, but anywhere around there is fine, and looking for a 5-wave move up there. So this move up through here would be pretty much the same distance as wave 1, because the extension is in wave 3 there. So we can still continue to see support for the base metals, the materials sector, the BHPs of the world. But it is corrective. This is US BHP here. We are looking for a wave 4 correction here, which we're getting. It's a complicated sort of correction there. The Australian BHP has moved up. There's a nice switch pattern here to trade long at that point there. Just check on the volume to see if that's on strong volume there. If that's the case, then that can push higher from that point there as well. Yeah, we'd be looking, because we on this one here we can count 5 waves to the downside. So a move up under the low of wave 3 here would confirm that we've got a larger move here happening. So yeah. Right, the gold market is pretty much going on track here. If I just got a bigger chart here, just bear with us a sec. No, it's not that one. Not that one. Well, basically this will do the trick here. So look, essentially we're looking for wave 4 pullback up through to here. The wave 4 38.2 retracement level is basically the 1262 where it is, so that fits nicely. However, the wave 4 of 1 lesser degree is over here, so it could test the 1300 there. So we were looking for that to occur, but looking for an A wave, a B wave, and a C wave to happen like that before we see any further downside there. So that's what we're looking at. We're in the middle of this B wave here, and B waves are always in 3 waves, so we'll be looking for an A, B, and a smaller C as such there. So that's what we're looking at here, and we've got our first leg down through here, which would be the A wave. The B wave we'll be looking at next, which will probably be a bounce off the 234 here, 1234 here area. But I suggest that waiting for wave B to this wave B here, the A, the B, and the C here to complete before going long on the C wave there, and that would be the trade to take. yeah, but still, it's just a little bit more time to unfold for that to come into play. The silver seems to be a bit more complete in its B wave as such. Um, so just, because looking at silver here, we've got, from our wave 5 low here, we've got, up for 1 and back for 2, the 3 and the 4 and the 5 to count in here. But this, you can see that, this corrective pattern is, has been going for longer, and it does count as a corrective pattern in terms of an A and a B and a C for the A wave. So that's in 3 waves. So we know that whatever follows is going to be corrective as well. But we know that that's an A wave. We've got the A, the B and the C here for the B wave, and the C wave to come down through here. It may not be finished because this is wave 1 to here, wave 2. It's probably the 3rd to here, the 4th and the 5th here. But once it does settle in and find, develops a low in here, then it's more matured to look for that up move through there. So just allow it to land. I'll do some more work on it. Yeah, it's reluctantly wanting to go down, so we'll just see, but I can see that that's quite corrective here, but it's the end of the session there as well. So yeah, let's sort of look down towards here, but a move down into here, and then finding support back on the 1920 or the 1930 would even be better. If it does move straight up from here and find support on the 1950, well, you go along from the midpoint, the 1950 here. If it moves further down through here, then allow it to move down, and then it will work its way back up and find support on the 30, and you can grab it from that point there. Alrighty, let's have a look at FX. Okay, starting with the euro here, and starting on a weekly chart as well, just to get some perspective here. What we're looking here for is that we can see that we've got a 3-wave price action through here, which is a corrective move, which we've labelled down for 1 and back for 2. And we're looking for wave 3 to unfold through here. And of course, in wave 3, there's going to be 5 waves in there. And we're looking for the first wave down in 5 waves, and then the ABC for wave 2, and looking to trade short from that point. That's been the general plan. Things don't always pan out as you would like them, and this is how this is panning out at the moment. So yeah, so from this wave 2 high up here, we're looking for this wave 1 to be in place down through to here, and we've considered that this is the wave 1, wave 5 of wave 1 there, and then we were looking for wave 2 to come back. So we had the wave 2 at wave 4 here, because we know it does shallow retracement, the euro does shallow retracement levels. Normally we'd be looking back up here at the 61.8% back up through here. So you can see that this is a really, we have to basically move this wave 2 to here. Okay, so it really makes it a very small retreat. It does not have the right look and feel about it, but it's the best labeling that we can do at this stage. The other important factor would be the price here. So this price level here, 130, which is a minor trading level. It's number 3, so it's the top of group 1. And if this becomes the retested resistance, which we're looking forward to it to do, then that creates the short trade there as well. So as I've mentioned before, it can be a bit tricky trying to get into trades, getting it exactly right. So sometimes it's better off, assessing the risk factor once you've got confidence in the particular direction of the trend, then it's a matter of working out what risk that you want to outlay for the trade. And one way of entering the trade, rather than sort of looking for the perfect setup, is to place orders at various prices through the trade. And understanding the if it bounces back on you, what you'd be holding in terms of capital risk there. But look, essentially, in a bit of a nutshell, we're just looking for that 130 to become the retested resistance. Now, we've got this support line through here as well, which will have some sort of bearing, so you'd need to work out that. But for a retested resistance, we're really looking for, a retest like that, and the failed retest as such, then further moves down. So we're looking for that retest. We've got the breakout here, and of course this could just continue, to the downside as well. So you need to have a plan for that as well. But drilling into here to have a closer look at this, if this is wave 2 here, then this is down for wave 1 here and back for wave 2 here. Okay, so when we're drilling into here, we'd be looking at that wave 2 here that I just mentioned, and then we'll be looking for this down for wave 1 and back for wave 2 here, and now we're looking for wave 3 to unfold in brackets down through here, but in folding out, we'd also be looking for a 5-wave structure. So we're looking down here, down to this point here for wave 1, back for wave 2 here, and we're looking for wave 3 to unfold through here. Now wave 3 here should be longer than wave 1 here, so we should see this develop down here first. So we may get our retest bounce off, way down here at 129 there, because what we'd be looking for, well, it doesn't really give us a 61.8 retracement level, but, just textbook stuff would be looking at that 50-60 here, which would be the supply level through here as well. So, yeah, so that's kind of what we're looking at. So we need to track this 5-wave structure to the downside, which is this the wave 1 here, the wave 2 here, the wave 3, we want to see it longer than wave 1, the 4 and the 5 here, then the A, the B and the C here for wave 2, and then it'll work lower from that point there. So that's what we're looking at. If I can just drill in here a bit further. So, and counting that down from that wave 2 high here, we've got a very nice 5-wave structure here for wave 1 here, then wave 2 pulling back, and then we've got wave 3 unfolding. So from we've got a couple here really. We've got wave 3 of this degree here coming down through here, but there'll be 5 waves in that. There'll be the 1, the 2, and the third wave is always the longest and the strongest. So in the third wave, we've got nice 5 waves down to here, wave 1, wave 2. This is the third of the third here, so it's moving really quick, and we've got the 1, 2, 3, 4, 5 in here. We've got wave 4 pulling back to the wave 4 of 1 lesser degree, or 38.2%, so it's a close of session. It looks like it can move up from that point, but there's wave 4. So we'll be looking for wave 5 to the downside, so that would be wave 5 of 3. So we've still got 4 and 5 to go. So there's still this trend is still moving to the downside. So there's still further to go down. We just, it would have been nice to get it here if you're there at the time. But look, the trend is definitely to the downside, and it's just a matter of what degree of structure that you're trading. If you're trading sub-levels, these guys here, then it's not a problem. As such, you'll just wait for the 129.72 to become the retested resistance to catch the next move down towards the 29.50, the midpoint here, but expect to bounce back to the 60 at that point before it works lower down as well. The Australian dollar, we thought that we may be having the bottom of wave 3 in place here. We don't think that's the case now. We think that it's still coming down, and we'll be working in this wave from wave 4 here down to wave 5 here in a ending diagonal triangle, and this is the real upside here for an ending diagonal triangle. It still could be the bottom of the third wave here in terms of we need to be mindful of it, because base metals have got support, the A, the B and the C here as such. That's a real possibility, but looking at the structure, we see sort of further downside to come here. This obviously down through here, we're looking at this as being wave 1 to the downside here, and we're looking for a 61.8 or some type of wave 2 here, which could just jump out of this this sort of little triangle pattern through here as such, so keep an eye on that. But just drilling into this structure coming down through to here, we're looking for 5 waves coming down, so that counts reasonably well in terms of the wave 1 to here, the wave 2 here, which is below this one here, and then we've got from wave 2, we've got 5 waves down for wave 3 here, so the smaller 5 wave structure through here for wave 3. Wave 4, it stays under wave 1, so that's okay, and then wave 5 down here would be the 1, the 2, the 3, the 4, and the 5 here. So that can be completed right there, and this can push straight up to here. But what we're looking for is a 3-wave price action up through there, in terms of, something like an A and a B and a C. Look, it may retest here, it may not. Just have to see how it sort of pans out. But a move above the 72 here, and then later on finding it back here as resistance, then that's what you're looking for. You're looking for that sort of failed retest in there, while the market is under the 92 as well. Then it's also more inclined to be a bearish bias as well. So that means we'd rather be looking at 90 rather than 95. If the 92 becomes support, then we need to look higher from that point. The 61.8 retracement level from here down to here is in this little area through here, so support above that 61.8 would be confirmed as bullish. So, but anyway, looking for this to move up higher through there. This is it here, so the 1, 2, 3, 4, and 5 here. This is sideways here. Normally the distance sideways here would give you the distance to the upside here. So we can see it moving up. There should be a nice sort of trade there. As long as you stay long above the 40, then you'll be fine at that point for a little move up through there. Alrighty. Well, that's it really. So look, anyway, on the robo trading, we're keeping things just small and tight, and we're just waiting for a trend to establish. We'll put in a few long positions today, so we sort of balance the books up a little bit. But we're still not sort of clear on the main direction from the US market. So we need to be, we need to have that clear before we can start shoveling money in a particular direction. So just trade light, keep it small, and the time will come. So, alrighty. Well, good morning, good luck, and enjoy the day ahead.